As a Tesla investor, how much do you think the company's shares will be worth in 3 years? Tesla stock is currently trading below its valuation. And while this may seem like a huge problem for investors, there are several reasons to stay bullish on the car company, and this is one from investment management firm Ark Invest, and it is definitely one to watch out for. According to the firm, Tesla shares can go up as high as $1,500 per share in just a space of 3 years. You definitely don't want to miss out on this one. Hey guys, welcome back to Tesla Tomorrow. Ark Invest recently announced a price target for Tesla, split adjusted at $1,500 per share in 2026. This was disclosed by Ark's CFA, Cathie, who reiterated that Tesla is way ahead of the competition. According to Cathie, Tesla has over 1 billion miles driven in its full self-driving beta, and a massive storage of data more than that of any other of its competitors. A hint of this could be seen in the progress of the company's FSD beta program, whose user base appears to have grown by 475% year over year and 78% since the third quarter of 2022. What does this mean for Tesla? More details in this video, but before we get into it, don't forget to like and subscribe and ring that notification bell to keep up to date on everything going on with Tesla. Tesla's FSD beta fleet had grown steadily, culminating in Q3 2022 when the group reached approximately 160,000 users in North America. Considering that Tesla's FSD beta fleet has grown to 285,000 cars, it would suggest a growth of 475% year over year. Likewise, Tesla has a huge advantage when it comes to user data. From the very beginning, the automaker has prioritized the collection and utilization of all possible data analytics from its car owners. In fact, since 2018, Tesla has collected over 3 billion miles of real-world driving data, significantly more than the amount collected by its closest competitors. With this approach, every human interaction with Tesla's vehicles, including wheel turn or hitting the brakes, generates a data point that is analyzed and used to improve or create new algorithms which are sent back down to the vehicle over-the-air updates. This means that Tesla owners are not just driving a car to commute to work or run errands, they are simultaneously training the Tesla engines as they go. And this is a big deal for a car company like Tesla. According to Cathie, Tesla is still on track to meet its 50% annual growth rate, majorly because of the expected growth in electric vehicles. The adoption of electric vehicles is rising due to increasing need for reducing dependence on imported oil and rapidly depleting fossil fuels. Costs of oil production is rising, which is leading to high costs for importing oil, and countries that are majorly dependent on oil imports are required to invest substantially, thereby creating economic pressure. A report from Emergent Research stated that low emission level of EVs is driving its adoption, and this factor is expected to boost market revenue growth in the future. EVs emit lower levels of greenhouse gases and air pollutants than other petrol or diesel-powered vehicles. They rely highly on rechargeable batteries, and for this, driving these cars does not cause tailpipe emissions, which are one of the sources of pollution. EVs are powered by batteries, electricity, and fuel cells. This means they have lower dependence on foreign oils. This factor is expected to drive adoption of EVs during the next several years, and the global EV market size, which reached $238.67 billion in 2021, is expected to register a revenue CAGR of 22.2% by 2030. The demand for electric vehicle is already growing, and there is no doubt that it will be bigger in the future. These vehicles do not emit smoke or toxic gases in the environment and contribute towards sustainable environments. Besides, increasing investments towards research and development activities by governments and various government initiatives such as favorable tax policies, funding for vehicle charging stations, and subsidies for purchasing those vehicles are creating lucrative revenue growth opportunities for EVs, and such factors are expected to drive market revenue growth over the coming years. Although these factors are strong drivers for electric vehicle adoption, Cathie has said that electric vehicles remain the future, irrespective of these tax credits or other regulations. Ark Invest recently sold nearly $42 million of Exact Sciences shares, pushing the medical diagnostic company from its purchase to funds top holding and replacing it with Tesla. The firm purchased 13,243 Tesla shares, allocating up to 8.83% of its fund's total holdings to the automaker. Likewise, Ark Invest CEO Cathie also sees big gains ahead for the stock. She said, just from electric vehicles, there could be almost a 5-fold increase in this stock during the next 5 years. And if you believe in autonomous cars at all, it's closer to 13 times during the next 5 years. So we are as bullish about Tesla as we have ever been. According to Wood, Tesla has implemented big global price cuts, and she thinks that's a smart thing to do. She added that the automaker can afford to do this since it has the lowest cost structure and is innovating the most aggressively. Cathie Wood stated that while other auto manufacturers will have to follow these price declines, it will hurt them significantly from a margin and long-term profitability point of view. Before now, Cathie Wood had suggested the rally in energy stocks will soon end and reiterated her bullish view on Tesla. In a previous webinar, Wood said that Tesla will continue to take market share as global oil demand falls by 30% or more over the next 5 years. She added that the company's recent moves to lower its prices will likely continue aggressively and put pressure on other automakers to match them. Investors' appetite for tech-heavy bets like Tesla has somehow returned after getting crushed by the Federal Reserve's tightening of monetary policy last year. Traders are now eyeing cooler inflation that could put the central bank off of its path of aggressive rate hikes. Ark Invest's hold on Tesla was badly bruised last year by the Federal Reserve's aggressive pace of interest rate hikes that weighed heavily on technology stocks. This huge beat by the Federal Reserve on Tesla was a big talking point for the bears, who lowered price targets for the automaker, valuing it below expectations. However, Wood thinks that the Fed is close to ending this tightening move. The Tesla bull said this in a call with investors, adding that a pivot would strengthen her fund's growth-focused strategy. What Tesla bears need to remember is that retail investors were still actively buying Tesla shares despite the significant drops in the price. In July, retail investors bought Tesla shares massively. Individual investors had piled into Tesla shares as they prepared for a potential split of the maker's stock, and that purchases contributed to a recent upswing in the broader US market. According to Vanda Research, Tesla purchases were skyrocketing, and retail investors had never been so bullish since the summer of 2020. Net retail purchases of Tesla reached $693 million in the previous 5 sessions, with the automaker topping Vanda's weekly retail flow tracker. At the time, Vanda wrote that it is suspected the strong buying activity followed the 3-for-1 stock split proposal. And while a stock split shouldn't really have an impact on the stock price, retail investors speculated on the fact that historically, stocks rallied after the split announcement. It further cited that it suspects that retail investors will continue to buy mainly single stocks and tech in the future as long as the rally consolidates. Likewise in December, which ended what some seemed like the worst year ever for Tesla shares, individual investors' faith in the EV maker didn't change. According to Vanda, such retail traders have continued piling into the shares and have been strong buyers since the beginning of the year, driving their net purchases to record highs in both December and the fourth quarter. According to Vanda's senior strategist, Varij Patel, retail investors have bought more Tesla shares and stocks over the last 6 months than they have done over the last 60 months prior to this. He added that for institutional investors, it's a seller's paradise, and you have a buyer that is clearly not reading the fundamental signals. Tesla is expected to see massive growth in sales in the coming quarters. The company's CEO Elon Musk painted an upbeat picture around demand for the company's vehicles in a fourth quarter earnings call with investors. Musk said that in January alone, Tesla had seen the strongest orders year to date than ever in history. He further disclosed that the company is seeing orders that are almost twice the rate of the production. Tesla's on a path to enormous success in the future, and this is likely why Ark Invest remains as bullish about the car company as it has ever been. It's clear that Tesla's leading the trend, and it's going to keep doing it for a long time. But what do you think? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.